Okay, so first off, let's talk about market manipulation. Let's talk about what market manipulation is. And what is market manipulation? Well, obviously, it's manipulating the market, right? But this comes from what you call a market maker. Market makers, they dictate the price, they didn't dictate the balance of a stock share, the prices of a stock share. It's called a market maker. All right. And what they do is they control the supply and the demand. So this is what you call keeping the market liquid, right? To keep the market liquid, they must have a say so in the pricing and the activities going on in the pricing as well. So if it's too much on one side, they have to keep a balance because they don't want it to imbalance. They don't want the shares to become an imbalance process. So in order to keep it liquid, the market makers manipulate stocks. So if a stock is said to go up and you have, let's say the news is putting out something and it is said to go up, and then you have an overload of people that wants to jump in and ride that stock going up just to take their profits, market makers notice, companies notice. So what does a market maker do? What they want to do is, first off, what they want to do is they want to secure the real investors, not the ones that's just wanting to jump in and jump out, whatever, blah, blah, blah. So what the market makers do, if there's an imbalance, instead of making it go up, they'll pull it down first, shake off some people, shake them off. You know what I'm saying? Shake off the scary people, shake off the people that's there temporarily or whatever. They'll pull it down first until the numbers make sense, and then they'll bring it up. So this is manipulation, where stock is supposed to do one thing, but someone is on the other end manipulating. How do they manipulate it? Well, they manipulate it through buys, sales, and orders. You know, these companies have access to hundreds and hundreds of millions of dollars. They got access to the news. They got access to articles, Yahoo News, Google News. They can put out an article, you know, because one thing you can't do, you can't particularly manipulate a stock alone with just yourself. They have to put out an article, put out a news, pull some money out, get people moving, or whatever the case may be. You know, sometimes they say, you know, somebody sold 100 million shares or whatever, and then it causes a reaction, a chain reaction, right? So that's what market manipulation is. Now, let's define consistency. Now, consistency is where you consistently, like for one, like when you look at your profit margin on your brokerage account, it goes from one end to the other end. It goes from it's a steady incline. So this is consistency. It means that you are continuously profitable in your account. Consistency means you can be profitable every month or even profitable every year. You know what I'm saying? But constantly, there's a constant profit in your account. This is very important because this is the only way stock investing and stock trading makes sense. You have to be consistent. It is only one way to be consistent. There's only one way to be consistent. You know what that one way is? Trade setups. So let's go over what trade setups is. Trade setups is a continuous setup that when you see a stock at a certain position and you see it looking a certain type of way, you analyze a stock in a chart and you see a certain setup, you see it looking a certain type of way, and you take that same approach every time. You take the same approach to the stock every time. And what you find is if you look through the history of the stock, right? You look through the history of the stock, what you find is if you take this approach throughout the history of the stock, 8 out of 10 times, it's going to hit. It's going to do what I expect it to do. This is a trade setup. It's an approach to how you enter your trade. All right. A trade setup. I give you an example like trade setups, usually is You use indicators like RSI levels, or you use like moving averages. Sometimes you use like the momentum oscillator. And it's so many indicators that you use, that you can use. You choosing from thousands of indicators. You know what I'm saying? It's hundreds of thousands of indicators. So what happens is you'll take the same approach to every trade. Okay, this is where I enter and this is where I exit. This is how you become a consistent trader. You have to find, now the key, you have to find a setup that is profitable, that is more profitable than not. So for instance, if you find a setup with the 50-day moving average, you know what I'm saying? And you usually enter at the bottom of that 50-day moving average. And when it hit the top of that 50-day moving average is when you come out of it. This is a setup. That's an example of a setup. A constant and a consistent process to how you enter a stock, how you enter a trade. The key is finding setups. You know what I'm saying? The key is finding setups. You have to find, okay, throughout the history, what is a continuous way of entering this stock? And if I did it this way every time, I have an 8 out of 10 chance that it profits. So if a stock is going up or down or whatever the case may be, right? And you enter here and you say, if it drops here, I know that it's reverse trending. This is where I come out. If it goes here, I know it's going up. This is where I enter. You know what I'm saying? You got to have these rules in place. So a trade setup is very important. It's the only way to be consistent. Now, there's not only one trade setup, there's multiple trade setups based on your style. Whether I teach in the comfortable profits, is 3 types of trading. You have short-term trading, you have long-term trading, and you have day trading. I teach those 3 things in the Comfortable Profits Academy. You know what I'm saying? I teach 3 styles in the Comfortable Profit Academy. You have day trading, you have short-term trading, and you have long-term trading. These are the 3 styles I teach. Now, in order to be consistent, there's not only one trade setup, but you have to have one. You have to study and look throughout the history of a stock and study what works and what doesn't work. Now, I'm gonna give you one of my simple trades, my simple trade setup, and I promised you I would. So this is what I'm gonna do. This is a real quick video, real quick lecture. Now, I want you to get you in the right mindset to understand what consistency means, what it means to be consistent. It means trade setups. It doesn't matter if the market is manipulated, because if the market is manipulated, you still follow your setup. You know what I'm saying? And even if the market's manipulated, people are still going to react to the market the same way. In danger, danger is quick and abrupt, you know, and when the market and when the stock is going up, it's usually accumulative. You know what I mean? So let me give you one of my simple trade setups.